Well, I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone gliding, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward at what might happen in the next week. And we hope lots of opportunities, good ideas for you throughout the show. Well, the stock market jumped this week, just loving seeing Donald Trump in action as he quickly starts to fulfill his campaign promises. So far, 12 executive orders signed as of this Friday, and that simply brought the Donald Trump buyers back, the ones that came just as the election came in November, and they are just loving it, believing that his actions are going to stimulate the economy. In case you're interested in a little bit of recent history, because this seems like a lot of executive orders going on pretty quickly, let's just talk about recent two-term presidents, just the last few. President Obama, in his 2-year terms, had 277 executive orders. President Bush had 291 executive orders, and President Clinton 364 executive orders. So we're off to a quick start here, that's for sure. But there's still a lot way to go, even to catch up. And of course, this is just the beginning of term one. You might be interested in, in modern history, who did the most executive orders. Well, I don't know if this is fair to compute it this way, but FDR, Franklin Delano Roosevelt, in his 3.5 terms, had 3,721 executive orders. But don't forget, that was in the time of the Depression and World War II. So there was significant things going on at the time. Stock market for the week up 1.5% to 2% based on which index you look at. NASDAQ still the strongest index, and the Dow Jones Industrial Average finally did cross 20,000. In fact, getting up to around 2,100, and then just backing off here just a little bit on Friday. The dollar really. We were looking for a bottom to come and for it to begin to bounce, and the dollar did actually start to rebound. We think that dollar rally is going to be short-lived. Maybe has another week or two and doesn't get all that far, and we've talked a lot about that in our recent videos. That bounce, though, in the dollar did bring pressure on gold and silver, at least early in the week. And gold remained fairly weak, but silver had a pretty good rebound on Friday, and silver taking the lead in some strength, it could be good news for the precious metals markets. So gold, we actually nailed the resistance in there on the upside. We thought it would get up to about 12.18-ish. It got up to 12.23 and then pulled down pretty significantly. Gold down nearly 2% on the week. Silver, same action until Friday, and then got a lot more strength. The oil market, unchanged really, and that also following our analysis nicely. We think it is in a modest intermediate correction, and that before you know it, we think oil is going to be moving to the upside again. Bond market, pretty significant action here this week. Seems like, as investors are looking at that Trump stimulus, and if you think about this, Trump stimulus, a lot more people getting hired, but the the workforce is a lot smaller of available skilled workers for sure, and at this level of unemployment rate, that's likely to bring wage inflation. We're going to get some news on it this week, and I actually am now declaring the bond bounce over, and I think that they're going to start looking at the inflationary aspect of it, and I think that bond bear that started some months ago is going to resume here. So we're looking for rallies in the bonds to fail and get more downside. Interesting, we did a video for members on Thursday, and I was answering some viewer questions in there, and I had upside objective in the S&P 500 of 2290 to 2300. It got up to 2300.99 this week. So I had gotten some emails and tweets from people, okay, here's 2300, now what? So I did a little thinking about that, a little research, and I wanted to answer that viewer question, and so I did that. And in that research, here's what I came to. The answer is for what now is really in the perception of valuation in this market. There was a study done by TMAC, Thompson McKenna, that made sense to me. Think of 2017, pre-Donald Trump election. The expectations for S&P earnings were in the $126 to $132 for 2017. So then, of course, Donald Trump gets elected, and then perceptions begin to change. So in this study, if you look at the potential of the tax cut, the corporate tax cut, whereas right now corporate taxes here in the U.S. are 35% maximum rate, and the average effective rate for corporations is about 29%. Now, Donald Trump, he wants to cut the corporate tax rate to 15%, though the consensus pretty much looks like, and the Republicans pushing back, including Paul Ryan, are more like about 20%. So let's say that the effective tax rate is 29%, and the new tax rate will be about 20%, which might make the effective tax rate lower, but we're just going to use those numbers, 29 to 20, to be conservative. So let's say that that would mean that the average corporate tax rate will fall about 9-10%. So if in Thompson McKenna's study, they said that for every 1% decline in corporate taxes, that would equate to about $1.30 in improved earnings for the S&P 500. What that means is that it would take the expected earnings on average of about $130 up to $141. Now, the PE rate right now is 17.5%, which is on the high side. And markets do fail from these levels. But of course, the perception is that the earnings are going to go up a lot because of these changes in tax rates. So that would take the S&P 500, if you do this calculation, it adds about $11, maybe even 12, to the $1.30. So it's $1.41, $1.42. If you use $1.41 times 17.5, that takes the S&P 500 up to 2,467. So that is what the fund managers are looking at. They, of course, do the math. They went to school, taught them to do math and figure out valuations. They do get shocked by that sometimes, and that's what they're looking at. And that's why the funds are such significant buyers here, because they believe that the lower taxes and, of course, the stimulus overall are going to mean a much higher rate, a much higher amount of earnings for the S&P 500, and they just assume it's going to hold the same PE. Of course, if they get that would be, their wishes completely fulfilled, 2467 or higher, based on what they believe. If there's some modest disappointment and the PE, let's say, falls to 15 because there's a lot of pushback, and maybe because a lot of it is priced in, that actually takes it down to 15 times 141. That would be somewhere around 2,115, on the S&P 500. That's only 180 points lower than where we are right now. And if there's a lot of disappointment and this doesn't happen because there's so much pushback, which is just a complete long shot, that would take it down to 1950 or lower. In the S&P 500. Well, that might be pie in the sky for the bears or pie in the eye for the bulls, but the truth is that fund managers are looking for the best to happen, and that's likely to get them to keep pushing them on the upside. 2457, 2467, I doubt it, but that's what they're looking at. It's their fuzzy math, and that's why they keep buying them. And that means short them at your own peril. We're looking for a 5% drop or more in a short-term correction between now and early spring. When that happens, you better get your buy shoes on quickly, because we don't think they're going to stay down very long if we do get that quick 5% drop. All right, so that's my opinion on the markets and what these valuations are and why they got to 2,300 and probably beyond. Let's take a look here as we look at our 60-minute chart of the S&P 500, which we always do, which looks at the 24-hour trading and looks at the news and the things that push the markets. And here you could see that right there. There is the 60-minute chart. Those bars are each 60 minutes. And as you can see, the stock market did actually have a good week, as Tuesday and Wednesday it essentially launched. You could see that right over there as the buyers did come in. Monday, not much going on. Donald J. Trump's discussion of protectionism really did scare the markets, and you saw what went on in here as there was some correction. But as usual, the market does not stay down. Donald Trump signed 2 executive orders pretty much immediately to start the week. Dollar was weaker and the yen jumped big time. We had a great setup there in the yen. And the markets overall modestly corrected. Tuesday, Mnuchin, who is the appointee for President Secretary, talked about the dollar, and they was really, I got to tell you, that pisses me off, is that he cautions about dollar strength, and his comments are really supportive of a dovish Fed, which I don't really think he's really going to get, to tell you the truth. Bonds pulled back on that news, and the stock market absolutely launched. Housing starts down 2.8%, but I got to tell you, inventories are at record lows. So it's more about maybe there's nothing to sell, and that could be an inflationary aspect, and that really did help the bonds move to the downside also. Wednesday, after this big up move on Tuesday, you had another one here on Wednesday as the world markets really jumped. Eurozone up 1%, Japan up 1.4%. And Dow Jones crosses 20,000. Earnings really started to push the market higher, and Donald Trump has at that point already signed 10 executive orders by Wednesday, including this the Keystone Pipeline, Dakota Pipeline, the wall. I mean, really controversial stuff going on there. All inventories were bearish, and the oil started to move down. I don't think there's much more of that coming, and the bonds weak again, and that warning came as they broke a key level in there. World markets on Thursday were overall mixed, and you could see we got into some mild corrective mode in here. This is where we tickled out that 2,300, and natural gas had an interesting day because their inventories were really a surprise drawdown, and they popped big, but then gave it up again. Take a look at that natural gas chart on Thursday. That was interesting. Friday, small changes in the market, not a lot going on in here. NASDAQ still trying to beat the rest of the world here, as the S&P 500 here at just past the midday time is a little bit weaker, but the NASDAQ actually is up on the day. So that is what looks like a a pretty mild Friday going on. Gold was still soft in there, about unchanged on the day now, but silver had a very good pop at one point, up about 30 cents, so a lot of strength in there. Let's take a look at our calendar right there, and you can see we got a lot coming up in the coming week, so you might want to print this off and see what we have here. A lot of earnings reports, of course, still coming out. We're not out of that season yet. The big ones we're going to be looking at here, Tuesday after the close is Apple, Wednesday after the close is Facebook, and Thursday after the close is Amazon. So you can see some big ones coming out in there, and those are the ones that tend to be market movers. As far as economic events go, well, we have, as I mentioned, the employment cost index. Now, I believe that this stuff will start to be things that move the bonds. And I think we're going to start to see some upticks in employment costs. So that could be a good bond mover. We have, as far as the employment goes, ADP is on Wednesday, and then Friday we get the employment situation numbers. And, of course, we have the FOMC on Wednesday, their announcement at 2 Eastern Time. So that is a lot there to look at. As you can see, and a lot of news and a lot of earnings still coming out. So that is the look at the what happened during the week and the economic calendar. We have coming up here the best and worst stocks for the week. Lots of interesting things to look at, and I'll be right back. All right, this is the best stocks of the week. That's what we're going to look at next, where we look at the stocks that had some pretty good gains. Most of the gains this week of the stocks that did really well were really in the category of earnings, because this is a big earnings period, and we're going to start out by looking at the biggest gainer of the week. This is an important one because it was very much opposite of what we saw in the rest of the group. The rest of the group was really in the steel stocks struggling this week. There's been a lot of negative talk out there now about the glut in steel still being around. There's been some analysts out there really pushing to the downside in this group. We actually think that the group is going to have another move to the upside pretty soon. Take a look here at ATI, Allegheny Steel, the biggest mover for the week in our 320 stocks that we look at, which are the most actively traded stocks. And you could see there that this big up week right here, earnings a big beat. Tuesday, this stock was up 20%, and this didn't really help the rest of the steel group, but and that overall, I would say, is maybe setting the tone for what I think is going to be a few weeks of upticks coming again in the steel group. But overall, maybe not that good moving forward after, I think, what will be one more shot to the upside. Take a look at this one. Now, this one I've gotten a lot of emails on. STX. This is Seagate. This stock is listed on our best 14 stocks for the year, and I know that a lot of people did really well this week on this stock, and that gain is just enormous. We think that this was a really good pattern and a really good story. This is one of the tech stocks semis have done really fantastic. Also, a little peek at our cyclical rhythms in here, and you could see, note this low right over here and where it broke down. I want to show you a bearish circumstance where it called for this decline through that time period, but then you got this upward stair-step motion going on, and almost right on time, this bottom sets in and the stock jumps to the upside. Beautiful looking pattern there in STX, and I tell you, buy this one if it pulls back. Wynn Resorts, WYNN, this one has a big upside week. Also, this is because their Macau property, Palace Resort, had great numbers. Their earnings came out and they missed. But overall, if the first real positive comment out of the talks with President Trump and China, and this one could take off. We're actually looking for the potential up to this 50% number, up at around $121 sometime out in the spring. So this setting up a much better pattern. It's actually been a really long consolidation. This is basically about 10 months of moving in this sideways consolidation after this move, like a massive flag. I think if it gets above this level right over here, about 109.5, 110, you are going to pop up to that 121 pretty quickly. So that one, nice pattern in there, and it's looking pretty good. Speaking of stocks that we have liked, PHM, Pulte Home, this one beat on earnings on very strong sales. This one also in the category of our best stocks for 2017. Look at this extraordinary move as it gains 12% on the week. Strong sales, well, that's good news. Beazer Home also up about 12%. And that group looks really good. You know, it's interesting when we talk about these home builders that, you know, the prospects for interest rates going up are bad for them, but I can remember strong sales with mortgage rates at 6%, 8%. So when you get mortgage rates up to 4% and you've got inventories tightening the way they are, I don't think that's bad news, and that's why I thought that we could get some pretty good up moves in some of these stocks in this home builder group, and Pulte Home was one that I thought was going to do really well. I think you buy that one on the next dip in there. Next one we're going to look at is Royal Caribbean, RCL. This one moves strongly to the upside. So what's significant about this? Let's take a look here at these patterns, and I'll just do a little teaching around cycles. So you see this low that came right in this area right over here. That was pretty much on time. When it broke under that low, it sets up a bear trend that's going to decline right to this timing low right here. Man, that was just spot on. Noting here the stair-step movement and the downward movement right on the cycle rhythms. This one, the magnitude on the upside getting above this level was powerful, and when the bottom came right in this time frame right here, it sets up this big upside move, and there you get it. Beautiful upside move following this steep channel on the upside. Yes, you can see how we have it drawn now from the top of the channel. We are expecting a correction in RCL, and you can see right in here that takes you down into sometime in February. Maybe you get a pullback to about 91, 92, but then we think it's probably up again. So RCL looking good, up 11% on the week. Let's take a look at these magnificent semiconductors. We'll run through these really quickly. Cypress Semiconductor, their earnings are on February 2nd. They're exploding to the upside in this upward bullish phase. This one was up 10% on the week. Maxim MXIM, look at that explosion, and right off of that cycle low right over here. Note to our chart subscribers, we have revised this. We hadn't looked at this one in quite a while, and you could see the perfect cycle rhythms as these lows are spot on. And this one has come just too far too fast. Notice that when you get a big distance from the 34-week moving average, how you get pulled back. And look at that. I mean, we wouldn't be surprised to see a pullback in what has been a magnificent pattern in there. Their earnings beat. The analysts have upgraded the stock. That's what really pushed it up. 8% on the week, and we think it's about to take a rest in there on a stock that was really good. Speaking of things that were really good, this is a gorgeous pattern. We had a beautiful long side setup right in here. We've been bullish on this stock all the way up in this upward trend, and the upward trend resumed and is only 1 week old on this upside. I would buy any dip in there in Micron, up 8% on the week, and a nice bullish pattern. MRVL in the semiconductor category also. Look at this magnificent cyclic action as you get this low on these nested bottoms right in here, and it breaks out of the pennant formation or triangle and moves to the upside. Again, this is only week 1. That would be equivalent to this week 1 right there, or this week 1. That was a little bit more like week 3, but you could see 2 months to the upside, two and a half months to the upside. Well, would you sell that one based on that? I don't think so. powerful looking stock as far as that goes. And the next one we'll look at is AVGO. This is also in the semiconductor category. This one up 7% on the week. You could see it's been in this beautiful bullish upward pattern. We keep marking off positive cycle, positive cycle, positive cycle. It's now moved up. Again, it is another one that is very overbought. We have it overbought short term. We have it overbought intermediate term. The distance between the high and the 34-week moving average, when it gets that far away, it then goes into correction. And yes, you're there right now, and you can see our cycles are pointing for a correction. We would guess intermediate 23.6%, around the area of about 196 on the downside. On a pullback, that would be about $9 or so in this magnificent big upward trend. One more positive mention: Boeing up about 5% on the week, as the 787s, that's starting to pay off for them. You know, they had big upfront costs, and that then set it up for some maybe a little slowing in earnings there, but now the deliveries and the profits are starting to come in, and got a pretty big up move. We think it's moved up too far also and will stall. We're looking for a pullback in Boeing to about the area of 163 to 165. That's the best of the week, and I'm going to be right back with you with the worst. All right, now let's talk about the worst for the week. We're going to look at a bunch of charts in here, but not quite as many as we did in the last segment because, well, big up week in the market and more up stocks than down, and especially on the earnings reports. But we're going to be redundant, and we're going to show the stocks that are moving down that we have been super bearish on as our biggest decliner for the week in our group of stocks. Sears, SHLD, and they talk about the burn rate in there. There is a collapse going on in here, and it's following our analysis, well, nearly perfectly. Here is that chart of the Sears in meltdown. You ever heard of a fire sale? Well, here you go. The stock is on fire. And there you can take it all the way down here as it burns down. Their burn rate just killing them. Same thing for JCPenney. We were looking for the stock to potentially go down to sub 7, maybe 5. And it's gotten down to $7 on the way to 5. And it's got, according to this pattern, another month or so to go on the downside. JCPenney, take a look at this one, as it keeps the melting down. We thought it was going to be going down to 2, and it is on my list of worst stocks for the year, and so far for the year it's given up 20%, something like that, more than that. So it's ugliness personified, and those stocks absolutely annihilated with the rest of the brick and mortars. And who's Amazon going to kill next? I think Amazon's going to kill Netflix. How do you like that? Take a look here at First Solar, FSLR, and this stock moved to the downside. I talked about this in a recent video this week, saying that forward PE of 50 and these earnings keep coming down. Look at the estimated earnings for 2016 were $4.25. The estimated earnings for 2017 are now 67 cents. And still potentially falling. So that's why this stock is getting sold in here. Their earnings missed. Their guidance was soft. Analysts are all over it on the downside. I like CSIQ better. Somebody asked me about SunPower this week, and I'm not loving that one either. And Donald Trump, well, he's going to have to get on board at some point and say we do need some alternative energy, right? Can't just be fossil fuel all the way. So I got a feeling we're going to get a turnaround in that. CSIQ is the one that I like in there. Whirlpool, WHR, take a look at this. Massive decline in there. Earnings missed, guidance soft. Analysts have moved to the downside on this. First Solar, I told you that wrong, actually, as First Solar broke because of one of your favorite TV touts talking negative about it. I read my notes wrong there for a second, but the notes for Whirlpool are correct, and this one just a miss on everything. Take a look at the daily chart in here. I'll zoom in here, and you could see, note this big doji and this giant kicker comes down to the 89-day moving average. That could give you some support in here. However, this pattern says down. We're looking for under 150 by March. It's now trading at 170. That means you sell it if it has an uptick because it has rolled over. And what happens when it rolls over with another 6 weeks to go on the downside? Look at this one. Look at this one right in here. You can see those same down trends, and this one is not done on the downside. So Whirlpool looking bad. Told you about the steels and all the negative talk out there, and you can see in here that when we look at this one, AK Steel down 17% on the week. If you saw the earnings report and the stock trade higher after the earnings report, you got fooled because there was a non-recurring earnings in there, and their cash flow crashed, absolutely crashed, and that's why you see this moving down the way it is. I think that, like I said, steels I think are going to bottom for another upside move. This is not one of the steels that I would go for. I think U.S. Steel has got a much nicer pattern for an upside move, and I think that Trump comments and policies will favor U.S. Steel. So this one I would not be the one I would buy. 17% down on the week. And the next one we're going to look at, JBLU, JetBlue. Now, I think this is significant, and I'll tell you why. Now, JetBlue, their earnings were in line, but there were pressure on fares. And we see a correction in the group coming. And we expect to bounce. Now, I want you to see in here the way these patterns work. So you see this one right in here? That's this. You got a small bounce when it's in a negative pattern and a big decline. You could see this one the same, and the secondary move in here, that was more bullish, and you see that. Now look at this one right in here. That's this right here, and a bounce coming in here, and we would sell it because we think that this period here through March is going to bring a decline, and we think that this talk of issues with a softness in fares, we think that's going to affect the group, and we're going to get some commentary in there pretty soon by other analysts that's negative. Now, American Airlines is on my list of favorite stocks for the year. I even think that that's going to be correcting, and that we're going to end up seeing some better buying opportunity towards late winter or spring in the airline group. That is the worst of the week, and I'll be right back with our short-term view. In the meantime, take a look at what we do here. Take a look at what we do here at askSlim. All right, that is what we do here at askSlim. And if you would like to get our all of our content, there's lots of ways that you can do that. We have several different memberships. Level 2 gets our all of our videos, 9 categories, over 200 videos, and you learn a lot about trading and investing, that's for sure. Level 3 gets our rankings and trade setups. and all of our videos. And level 4 actually gets our charts every week. So if you want to give us a try, you want to try level 2 with all our videos, or level 3, and that level 3 with our rankings and setups, and that includes our new short-term view, which looks at 5 different markets versus looking only at the stock market in this video, then send me an email, slim@askSlim.com, and I'll send you a special link for half price for 1 month. You can give it all a try, and I think you're going to love it, as our subscribers all do. All right, so now let's talk about our short-term view as we look at the stock market here. So in our big short-term view, where we look at 5 markets, we were between 60 and 65% correct. We like to be 65% or a little bit more correct. And this was maybe not that good of a week for us overall, and especially in the stock market. We got the stock market wrong, and we actually thought the stock market in the intermediate term was going to go to 2,300, and we got that. But our short-term call on the week, which I know we're crazy for doing that for what we think is going to happen in the next 5 days, we were wrong. We thought that the stock market would be down. We thought it would get under the 2250 area, and it was based on a repeating pattern that we look at, and that's what we do, which gives us we believe an edge in the markets. We looked at that repeating pattern, and it was suggestive of the fact that we were going to have a down week, a modest down week, and then move up again after that. Well, we didn't get it. The pattern shortened up on us, and there's no way we could have known that was going to happen. Let's take a look here at the S&P 500, and you can see in here our short-term perspective. Now, this was our minor support zone in here. Now, if you look at these patterns in here, you can see the clarity in the distances right there. And it called for a few more days down. That is what fooled us. And you'll note here that this was an 18-day low in that cycle, a 19-day low in that cycle. We were looking for 18, 19 days in this cycle right over here, because we've had this repeating 9-day patterns right in here, as we had right in here. This was a 9th-day low, and this was a 10th-day low right there. So that made 19. This right over here, unfortunately, was a 7th or 8th-day low. And then this one really shortened on us, and that had us fooled. When that happens, it's because buyers are really anxious. And then it got right up to our resistance zone in there that we've literally talked about for weeks and weeks. So the good news is we were right on the intermediate term. The bad news is that we were wrong on the short term. So now what are we thinking about for this week? Well, you can see it's starting to stall right in here. We are looking for a minor down week. Now, if I take a little closer look right in here, you can see our minor support zone in here. That's between 2279 and 2285. We're going to look for a choppy week with a small downward bias. So in other words, this pattern right in here, we just think is slightly moving over right in here, and you could see that right here. And we expect that we'll probably get about 4 days, 5 days potentially in here, and then setting up another up move to see if they can get through 2300. So we're only looking for a modest try on the downside and then up again. We believe that this rally in here, if this shape does come as we expect, will tell us a big story. And as you could see the way we have it drawn, we believe it's going to set up a intermediate term correction. In the beginning of this show, we talked about a potential 5% decline or a little more, and we think it comes after this rally over here. Now, I'm giving you some intermediate term picture, but this week we think it's modest down and doesn't stay down, and we'd buy it. It gets down into this minor support area for the next rally. So as far as talking about the VIX, a lot of people want me to mention the VIX in here, which we look at more extensively in our member version of this video. The VIX got down under 11, like 1030. Craziness, right? We only think it's got maybe 11.5 in it in this little dip that we're looking at here, and then getting back down near that 10 area and implied volatilities. And then the risks of of that picking up will come in a few weeks from now, of getting much more higher implied volatility. So that's it. Man, we covered it all. Lots of stuff in here. I hope there was great information for you. Don't forget, write to Slim at askSlim.com for that half-off month for first-time subscribers. I think you will love the information. I want you to be careful because a lot of craziness going out there. You know that. And we're always wishing you great trading.